There's a lot of confusion surrounding financial advisors. A recent Magnify Money survey found that while 45% of people without a financial advisor think they are more expensive than they are, 95% of those who use one say they are worth the money. So, is having a financial advisor worth it? We think so. And here's what you need to know when choosing one.
Choosing an advisor or choosing a fiduciary planner is a huge piece that most people come to us for, whether they're using certain programs online or hear us through radio or TV. The big thing about an advisor is fiduciary, there isn't a specific designation that makes one a fiduciary, and that's what's confusing in the industry. Even some newer designations are using the word fiduciary, but that just means to one classification of the management. A fiduciary, doesn't matter who they work for or their company, is someone who is saying they are putting their best interests above your own.
As you're looking for an advisor, whether they are independent or working for a broker-dealer, you may hear about the standards that they're held to when working with clients. The thing is, there's a big difference between suitability and fiduciary standards.
Now, the suitability standard basically is that questionnaire you probably answered before. Asks you a whole bunch of questions about your risk tolerance and your understanding of money, and then the advisor will score that based on what you say. They pick certain different investment vehicles that are suitable for you based on your answers. To me, that's a shortcut, and it's ridiculous, and it's not professional. A true fiduciary standard the advisor has a true conversation with you and your family, seeing what makes you tick, what's important to you, what you don't like, what you really do like, and they put a plan together for you that has no commissions coming out and it will give you that lifetime income. It's a plan based on your answers, based on what you need, with no games, gimmicks, or financial termites.
For some, it may seem wise to bypass going to an advisor altogether. An eMarketer survey showed that in 2021, 3.5 million Americans used a robo-advisor to handle their portfolios. That number is expected to grow to 5.2 million by 2025. Although they're growing in popularity, how effective is a robo-advisor? Are they held to the same standards as human advisors?
Robo-advisors, there is a classification. I know there's a lot of question behind this, and we honestly don't know how it's regulated yet, even from our side of the table. Robo-advisors being a fiduciary. I can see how the answer could easily be yes or no, but as we've kind of seen, robo-advisors are becoming less and less kind of popular than they were just a handful of years ago, mainly because of the volatility, the inflation, and the interest rate environment we're in. Their algorithms could not take into account an emotionally driven market because data wasn't there supporting the pricing of the market. There was a limitation that a lot of actuaries didn't take into account. But I think technology, algorithms, robo-advising, I think financial advising is going something that is more behind a screen, but I still would like to have a hands-on approach. It's like, I love that airplanes can use autopilot, but I need to know if there's something unforeseen, that there's someone in that cockpit hands-on that can make changes.
Whether your advisor is in person or behind a screen, the real question still lingers. How much will it cost to work with a financial advisor? Is there a difference between how one is paid versus the other?
Fiduciary advisors, compared to other advisors, the way they're paid can either be a fee only, where you have agreed upon fee, you pay the fiduciary every single year. I don't like that because, now you're starting from below. If the objective of financial planning in the financial world is to have more money year over year, if you have an advisor taking a yearly fee out, we've seen some charge $10,000 or more a year to put a plan together for you and then ongoing maintenance of that plan, well, then you're starting every year in a $10,000 hole. So you have to earn $10,000 just to break even. It's kind of scary. So a true fiduciary plan should be one that is totally transparent. You know what's going on, and you're not paying fees, you're not paying commissions unless it's agreed upon. And I really think there are so many different strategies out there that don't require commissions and fees that the lazy way is to pay a planner and then pay them again for the products. So don't do that.
You've worked hard for your savings, and there are some financial advisors that are nothing more than lines of code, following algorithms created to follow an unpredictable market. And some advisors choose to hold themselves to a higher standard than others. If you have questions about who you should choose as an advisor, come meet with Coach Pete and the Certified Fiduciary Planning Team at Capital Financial. Take advantage of the no-cost, no-obligation financial review to understand the ins and outs of your retirement plan. a customized plan based on your wants and needs. Contact us today. Also, be sure to like this video and subscribe to this channel for more retirement help.